Well, here we are in the beginning of the fourth quarter. I want to provide you just a quick recap of what we saw in the third quarter in the Portland housing market and what we can expect to see in the months ahead. And by the way, if you're a buyer or a seller, I've got some tips for you on how to navigate this market. Hey guys, it's Evan Swanson here of the Swanson Home Loans team at Guild Mortgage, and this is my Q3, Q4 housing update. Let's first take a look at interest rates because as we know, the third quarter was a monumental change in the Fed's monetary policy. Back on September 18th, the Fed conducted their first federal funds rate cut and what will likely be a series of rate cuts in the months ahead. Now, what's interesting about this is we've actually seen, and if you look at here in the right-hand part of this chart, mortgage rates have actually increased since the Fed has cut rates. Now that may seem counterintuitive, but actually it's in line with previous patterns. See, back in 2019 when the Fed cut rates, mortgage rates actually increased modestly. You really see this back in 2008 when the Fed cut rates, and same thing all the way back in 2001. So when the Fed initially cuts rates, it's not unlikely or improbable that mortgage rates will increase as they have for a short period of time. But here's the good news. Have no fear, mortgage rates are likely to resume their path lower. Mortgage rates on average, once the Fed shifts from rate hikes to a pause and eventually cut, mortgage rates on average improve by about 3 percentage points peak to trough. Mortgage rates peaked at 8% in October of 2023. There's no guarantee that history will repeat itself, but if it does, we would expect interest rates in the future to be available around 5%. That may happen in the coming months, or it may take a few years before we hit that trough. Here's the bottom line. The Fed is going to continue to cut interest rates. They meet again in November, they meet again in December, and at this point, they're telegraphing that the mortgage rates, the federal funds rate will continue to decline. What about home prices? Well, home prices right now, median price in the Portland area market's about $550,000, and you can see it's been pretty stable over the last couple years. If we look at the year-over-year home price appreciation for Portland, obviously fueled by historically low interest rates, home price appreciation really took off in 2020 and 21. For most of that time period, appreciation rates were greater than 10% year over year. Well, here's the hangover effect after interest rates began to increase. Home prices year over year last year were actually a decline from the year before, and it appears we've hit a more stable sort of time period for home price appreciation. Right now, home prices in Portland increasing by about 2 to 3% per year, and that seems to be a much healthier and sustainable path moving forward. What about seasonality? Because as we go into the end of October, this marks a very clear shift in what we can expect with regard to housing inventory, but also housing prices. You can see that it's common for housing inventory to follow a very seasonal and cyclical path. It tends to peak out around October. So you can see here the increases in the number of homes for sale gets up in the summer, stabilizes, and then begins to decline in November. So we actually currently have the highest level of housing inventory in the Portland market that we've had in a number of years. And what that means for sellers is it's taking longer for them to sell their homes than it has in the last few years. You can see since 2020, it's currently taken on average about 60 days for a seller to sell their home. And what we're finding is sellers are becoming more motivated, and this is manifesting in a greater percentage of price decreases. So currently in the middle of October 2024, we're at the highest level of home sellers that are having to decrease their prices at this point of the year than any year dating back to 2013. So I want to give a tip to those of you out there who are either buyers, sellers, or working with buyers and sellers on how to navigate this. So I've taken an example of a home that's currently on the market shown here. And I've shown the impact of a buyer that negotiates first a price reduction, because intuitively buyers tend to look at a home that's been on the market for a long time and say, I'm going to offer under list price. So in this case, this would represent basically a $16,000 reduction to the home price that's currently listed for about $870,000. And at today's interest rates, you can see the total monthly payments with 20% down would be about $4,380 per month. Now, what we're recommending to customers right now is to take a hard look at using that same money that a seller would otherwise be willing to agree towards a price reduction and instead obtain that money in a seller credit towards closing costs that we can subsequently use to buy down the interest rate. So in this example, we were able to get this buyer from 6.625 on their fixed rate down to 5.625% on their fixed rate, and that creates payments that are about $375 less. Now, of course, keep in mind this buyer is going to end up spending an extra $16,000 on the home, but look how much less interest they pay in the initial 5 years. They're going to end up paying over $20,000 less interest in the first 5 years, despite the fact that they have a higher purchase price and loan amount. So if you're a buyer out there, consider negotiating a credit instead of a price reduction. And if you're a seller, someone offers you a price reduction, maybe offer them somewhere in between with a seller credit to pay down towards the interest rate. If you've got comments or questions about the housing market, I'd love to hear it. Thanks so much for watching.